All-time highs, 50% drops, the market reaching $1 million in Bitcoin. Is it a fad? Is it a long-term investment? And how does it compare against property? Hi everyone, my name is Jamie York and I'm a property investor. I've been investing in property for the better part of a decade now. And in this video, I want to show you altcoins, Bitcoin, cryptocurrency overall, the risks, should you jump in, and how it compares against property investment in 2021, and should you take the plunge. If you're interested in finding out more about property investment and how it compares against other investment strategies, then this is the channel for you. And make sure to hit that subscribe button and the notification bell. And hey, if you're interested in this particular video, smash the like button so it helps the YouTube algorithm and push it towards more people like yourself. Bitcoin's been a bit crazy over the last few years, and I'm going to talk about Bitcoin specifically, but I'm talking about cryptocurrency overall and how it compares against property investment. So if we look at cryptocurrency and a brief history of cryptocurrency, I think it's going to really help us out quite a lot. So it came in conception in June 2009. So it's a relatively young investment vehicle, cryptocurrency in general, but specifically with Bitcoin. And over that time, it has gone from around, let's say £100 to make it very easy, all the way up to 40k plus at the time of filming this. So it'd be very easy to go, well, that's a crazy good investment, right? And yes, it is. If people got in here, and they've exited here, that is a phenomenal return. I genuinely don't even know what that is. What is it? 10,000, 10,000, 40,000 return? 400,000% return? Whatever it is, doesn't really matter. And you hear stories here of the pizza delivery boy that got paid with 30 Bitcoin back in the day when it was pennies, and they got rid of them or they lost them. Myself and Dan, we once had an opportunity to have about £3,000 worth of Bitcoin in the days here. We'd be multi-millionaires off it. And these are great, but it's a relatively short history. What you need to understand about Bitcoin and cryptocurrency is the risk associated with it, which I'll come back to in a moment. Because does it stop it being a good investment? No, but it helps you understand your investment policy around this. So if you look at the 5-day volatility, and I think this is quite interesting. If you look at the 5-day values, okay, and I'm just going to check this to make sure I've got it right. So in the last 5 days, the low has been 33,796. 5 days, bear in mind. The high has been just over 40,000. At the time of filming this, 40,100. Okay, that is about 6,200. That is a massive, that's a massive change. We're talking about 17% from the low to the high. That is incredible volatility. The thing that worries me about Bitcoin and cryptocurrency is it's a very, 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 very young market. Okay, and that's just a brief synopsis, a little bit of history, and there's so much more into this. It's worth saying this before I move on to the history of property is I am not an investing wizard. I am not an expert on cryptocurrency, okay? So I'm not professing to be. So if you are watching this and you are, don't shoot me down. These are just my thoughts on it, but I think it's really important. So if we look at the history of property, it's a very long, drawn out history. Okay, so even going back to the Doomsday Book. And as we said, even before then, that's when they started measuring property prices, and this is where the on average prices double every 10 years. If we look back at when this started, I mean, this was from 23 BC, before Christ. The Romans. Are you not entertained? Okay, the Roman era was based around property investment, and they started trading property for money and stuff like that back then. So it's a very long-standing growth curve where it's got a lot more knowledge, a lot more stability, and a long-term nature of bricks and mortar investment. Now, if we look at a period, if we say the last 5 years of both of these, if we said Bitcoin versus property, you can see how staggering this growth has been. So if you look at Bitcoin since 5 years, so 2015, you had about £230 to 40k plus. Absolutely ridiculous, okay? Whereas property has gone from 205k average across the UK to 251,500. At the point of filming this, it might be different when you're looking at it. So if we look at that growth over a 5-year period, we've got around 20, let's call it 22% growth, and then I'm just going to put bonkers growth. Okay, so what are you interested in? You still might say Bitcoin, but actually, I like stability. Now, the number one thing people miss out on is the risk component, okay? So it's all about the money you've got, your risk, and you have to bear in mind, reward is often linked to risk, okay? And your returns are often linked to risk. And this is where I think these divide completely. So if you have seen some of my previous videos, you would have heard me talk about diversification. Now, diversification is spreading risk. I've probably spelt that incorrectly, haven't I? Diversification, probably. Spreading risk. So this is where you start thinking a little bit differently. And you would have heard me talking about splitting them into 5. So I only have around 20% in certain asset classes as we're going through. And this 20% here is broken down into 5, 5, and 10. Now, this could be property, personal investments, stocks, whatever it is. Doesn't really matter for the purpose of this. Over here is where I'm looking. So my overall verdict is to not invest in Bitcoin and cryptocurrency, but it's to really mitigate your risk. So 5% of my allocation might be in digital coins, digital currency, cryptocurrencies, some altcoins and stuff like that. But this is where your portfolio risk comes in, because if you have money to spare, let's say you've got 50 grand and it is, I call it F off money, right? I just don't care about that 50 grand. If I lose it, who cares? It's not really going to impact me. If it makes me a load of money, amazing. That's going to be really cool, right? And here's why. Everyone focuses on when it's going up, but what about when it goes like that? It's funny, isn't it? All over Facebook, people go, oh, you know, it's going up, it's to the moon. You see that? Hold till I die. It's like, come on, man. And then what happens is they go like that and they're like, woohoo, yeah, it's amazing. And then it goes like that. This is when your taxi driver's talking about it, by the way. It's a great investment. I'm never going to drive a taxi in my life. I'm not even joking. I had taxi drivers saying it, right? And then it drops and then everyone shuts up about it. Everyone's pretty quiet about it, right? Nobody spoke about Bitcoin or crypto, or barely anyone outside of the scenes since the last crash happened. And then suddenly it's gone like that again, really rapidly. This year, if I can just double check these figures, this year it's gone from about 7,000 and it was stable like that, for most of the year. And then it's just gone like that. But remember, even in the last 5 days, it's dropped in value in the last 5 days what it was worth at the start of this year. It's massive fluctuations. What terrifies me with a lot of people getting into this is people thinking they're experts. And investment has a really worrying way of doing that for us, in that you can go in with quite a lot of ignorance. Okay, I did it with Ripple. Back originally, where I bought a load of Ripple and it went through the roof, and suddenly I thought I was a king and I understood it until Ripple crashed, and now I'm at minus $35,000. Okay, fortunately it's not money that's going to make or break me, but the problem is when something goes like that with any investment, it's easy to think you know what you're talking about, and that's the scary thing. So on Facebook, on Instagram, you've got all these people talking about how they are an expert, how they bought here and how they're keeping for a long time. The problem is you're going to be right eventually. Oh, it's going to go up, this stock. Well, every day you wake up, it's really only going to go one way, isn't it? And if you carry on saying on the days it goes up a little, told you, and on days it goes down, you shut up, and then it goes down, you shut up, and then it goes up, told you. You're going to be right. And the worst thing you could do is you might be able to fool the rest of the world, but you can't fool yourself. So this comes with risk allocation and how property and crypto are not comparable at all. I want to give some really weird analogies, right? Somebody says, oh, I think apples are great. All right, so you don't like pears. Or I really like steak. Okay, so you hate chicken. It's like they're completely different things. Saying I think crypto's great is not mutually exclusive to saying I also think property's great. I do not think crypto is a fad. It's too established now. There's massive companies. There's Tesla who's just bought 1.3 billion of crypto. It's long-standing. I do think it's going to take over. I do think crypto is going to be a huge part of our world. I can see how a Bitcoin could be worth $1 million per coin in the next few decades, but I'm definitely not going to bank on it. The reason I love property so much is it is reliable. It's just basic foundations. It's as reliable as you needing to eat and drink water to survive. Everyone needs a roof over their head. Nobody or not many people need cryptocurrency. So as we live on this small island, that is obviously the UK, right? And there's only a certain amount that we can build on here because again, we've got all these patches of Greenland, that's Greenland. So what happens is properties need to go up and up and up to facilitate it. By 2022, we're going to have 1 million housing shortage in the UK. When demand outstrips supply, what happens to prices? They go up. There's basic economics behind this. The problem with a lot of, same as stocks by the way, but crypto especially is, it's down to emotion, a lot of it. There's a restriction on cryptocurrencies, but based on what? Based on somebody saying they're not going to produce anymore. Right? It doesn't have more demand, but what happens is it becomes more established over time. It will become more and more normalized to buy and sell things with cryptocurrency. A friend of mine who has a lot of cryptocurrency had it as proof of funds to purchase a house and they had to accept it apparently. So it's becoming more normalized. People have bought and sold properties in the UK with cryptocurrency and Bitcoin, but it will become a normal exchange of value. At that point, in 50, 100 years, once it's become more established, I would then start talking about crypto in the same realm as property. But they are nowhere near comparable. And I'm not saying property is better, by the way, but it is more valid. It is longer term. It's definitely more substantiated in evidence. So here's my personal opinion on how to approach it. First of all, please don't compare them. They are not the same at all. Number two, look at your personal situation. What's your ability to replace your income? With the situation I'm in right now, I've got the ability to replace income fairly quickly. Okay, so if I lose 50 grand, it's not going to take me years and years and years to get another 50. It might take me a month or maybe 2 months, worst case scenario, right? That's number two. Look at your personal situation. If you've only got 100 grand to invest right now, okay, I would not be putting it in cryptocurrency. Okay, or even better, I would have an allocation and diversification approach to investment. And remember, before I go into this next step, this is not to be considered financial advice. So when we're looking at these allocations, remember I had the spread there of the 5. Property for me, my target is to have around 20%. The reason why is, no matter how much, and property is my area, okay, but I don't want it to consume all of my investments. It is a great investment, it's substantial, it grows over time, but I'm not going to put all of my eggs in one basket, okay? If I am going to put all of my eggs in one basket, personally, it would be property for me because it's safe and it's substantial, consistent returns. I had a friend of mine that's got a decent amount of money and he was about to buy a couple of properties and then he's gone, actually the returns don't look that great over long term, so I'm going to put it in crypto. And it's like, whoa, doesn't know anything about crypto. I don't think it's a great move at all. Personally, my allocation, dependent on your risk, would be 1% to 5% of it, okay? And the reason for this is my mindset around cryptocurrency is, do I think it will be long-term? Yes, I do. Do I think it has a lot of growth in it? Yes, I do. Do I think it's massively fluctuating at the moment? Yes. Do I think it's incredibly high risk? Yes, I do. So I'm going to invest, most of you, by the way, will want to be closer to 1% rather than 5%. But I want to invest an amount where if I invest my net income into that and it absolutely soars and goes up, great, I'm going to be happy, I'm going to benefit from that. And if it absolutely crashes and goes down, I'm going to be meh about it. I'm not going to be over the moon. I'm not going to be buzzing about it by any means. But it's money that I can afford to lose. And my suggestion is, unless you are an expert in this, unless you are looking at this every day and you are niching in, I'm talking from an investment perspective where I want to put in money, usually pick the time, but I'm more about time in the market rather than trying to time the market. I am not going to allocate more than 5% of my net investment in cryptocurrency, at least for the next couple of decades. And hey, I know in my heart of hearts, even if I put 4 or 5% in and it goes to 1 million in the next couple of years, I know I'm going to have people going, I bet you wish you put 90% in now. No, I'm not. Okay, because I know that it was the right bet. It's kind of like playing poker. If you know the odds of success, if you're incredible at understanding the statistics behind it, if you know there's only a 5% chance of you winning a hand, you don't bet 95% of your pot, okay? You make your risk around that. And if you won anyway, great, you took the associated risk. But everyone gets obsessed with when they win. And they only think about protecting themselves and the downside when everything goes wrong. So assume it will go wrong with your investment and allocate the percentage that you're willing to lose. For me, that would be between 1 and 5%. In my situation, close to the 5%. In your situation, I suggest that 1% allocation before jumping all in. So just to summarize, look, I am hugely biased on property investing. I love investing. This whole channel is around property investment. But I'm not an idiot. I understand the need for diversification, whether, it's inflation diversification against the risk, stocks versus property, gold, commodities, all of those sort of things. And I do think cryptocurrency has its place in a strategically diversified portfolio. What I really worry about is people comparing these two asset classes. They are not comparable. The potential growth and exponential returns in cryptocurrency, potential being the keyword, far outstrips what I can see in property right now. But don't go all in, because if it can go up that quickly, people are really excited. But what about when it goes down that quickly? Okay. Now, the truth is, there are no stupid investments. It's around the risk allocation to reward. Penny stocks have their place in a well-diversified portfolio, but I ain't going to put in much. Okay, I might put in 0.1% of something because one of them might pay off. It's the same as angel investors when they unicorn invest. They invest heavily in 10 unicorn or potential startups, potential unicorns, knowing that 9 of them are going to fail abysmally, knowing that that 10th is really going to pump up and go. But they have billions or hundreds of millions to invest. And it's the same with cryptocurrency. So should you invest in cryptos? Yes. And I would take advice of an expert in cryptocurrency, which I am definitely not. And I would allocate between 1 and 5%. For most of you watching, I do 1% of my funds. And some of you go, oh, I've only got £5,000 to invest. That's only going to be £50. Okay. Then it's £50. I've only got 20,000. It's only going to be £200. Then it's going to be £200. You need to think about the protection and long-term allocation and diversification of your portfolio. So, are cryptos good? Yes, if you approach them in the right way. Is property a great investment? Obviously, I think yes, if you approach it in the right way. But diversification is the long-term wealth asset allocation and diversification that you need to be looking at in order to have a successful investment portfolio. Hopefully you found that really useful. Hopefully you found it valuable. But hey, it's just my opinion. Let me know your thoughts. How much do you invest in your crypto portfolio right now? How much are you looking to invest in crypto as a percentage of your overall wealth? Let me know in the comments. Let me know your thoughts on this video. I'll make sure to reply to as many comments as possible. And hey, if you think people are going to get value from this, make sure to smash that like button. It helps it get out to more people like yourself. And if you're interested in finding out more specifically around property investment, then this is a channel for you. Make sure to smash that subscribe and the notification bell. And of course, I will see you in the next video.